Good evening, ladies and gentlemen. Today we're going to be reviewing SoFi and what the charts are telling us after they had earnings. But before we get into the video, quick legal disclaimer. This is not financial trading advice. Do all your due diligence in the market. All risk you take is your own because you put yourself in the trade, no one else did. With that, let's get into the video. So if we look at Earnings Whisper, link down below for Earnings Whisper if anyone's interested. Great site to review earnings, really good great platform for that. The Earnings Whisper number for SoFi was 0.08 cents, so they were expecting a loss of about 8 cents, along with the market consensus of a 9-cent loss per share. They reported a 5-cent loss per share, which is better than what the market was pricing in, so naturally it's a surprise to the upside. However, it's still a negative number. The estimated revenue is 426 million. The reported revenue was 456 million. That's really good. You beat revenue by a nice percentage. So that's up. That's bullish for the company. So now let's dive into the charts and see what they're telling us. So if we look at the daily, we're going to start with the bull case first. You have a nice big pump up on earnings. That's always positive. You see a nice green volume. Another positive, you're over the 50. We talk about this a lot, guys. Once you get over the 50, multi-year expansion of the market, and in general, that's bullishness ahead because it's the hardest moving average necessarily to get over because it's the weekly price. It's not the short-term price. It's very long-term price. So that's good. What I see and kind of stops there for the bulls is one, you were barely above the 200 daily. You were kind of actually getting rejected it. You didn't have a full candle close above it. And now you have a doji on the day. A doji, for all you that don't know, is when you have a candle of indecision. You have a wick at the bottom and you have a wick at the top. That means that bulls and bears were fighting all day between buyers and sellers, and they kind of just ended slightly up or slightly down from where the candle started. That's not necessarily to say that the stock is going to go down or the stock's going to go up. It just means that there is indecision and we have to be cautious about that. What is good in another bullish sense is you are in an uptrend for SoFi and you're continuing upwards. Now let's take a quick look at the bigger picture so that we can gain maybe some more depth of where SoFi is going and where it's been, along with going into the bear case afterwards. So if we look at SoFi's weekly graph, we have a pretty bearish graph overall. The price has been downtrending for a long period of time. You have a triple top right here, 1, 2, 3 tops. Once you have the third top and you break the base level right around $14.35, you just kept waterfalling down. This is an estimated from all-time highs down to here. You're estimating about an 83% loss to the bottom to 72% loss if you bought up there. Overall, for short-term in and outs on SoFi, if I was looking, I'd be looking short sell side. I wouldn't be looking at any long-term investment in this company unless these charts get fixed. Usually, if you look at historically, this could be the diamond in the rough. However, there's also an elephant graveyard of companies that looked exactly like this and went to bankruptcy. So the odds are against you. You're not going to be in favor of this coming back up to retest these highs of $23. You had an IPO, you pushed up, triple top, broke down, and never really recovered. This nice massive sell-off you had on high volume. You have decreasing volume. There's less investors, less activity in the stock. You are above the first time above this key level. So if I was invested in this company, I would just cut my losses at this point. This is a nice pump up to get out before this thing goes to zero, because the way we draw these chart patterns out, you form the base here and you measure from the middle peak. Basically, you project downwards. Projecting downwards, we get a price target of $2.83. If you were to invest, let's say right here to now, you're at a 25% loss. If you come down here, you're at 67%. So the bottom can always get worse, guys. If I was invested in this, I would cut my losses down. You had earnings, you had a nice catalyst to give you more value or your money back. I wouldn't be looking to invest in this company at all because one, liquidity is drying up. So shorting is not an option in this. If you're gonna short it, I do not recommend that, is to make sure you have a tight stop loss at a level that is below your risk tolerance, because most likely through the lack of liquidity will cause it to execute further out than what you're estimating at, and therefore or take a bigger loss. So make sure you manage that risk. Have a stop loss in place if you're shorting it. Have a stop loss if you're buying it. I would put my stop loss right below between these two EMAs on the weekly, and if it comes down there, breaks below it, gets stopped out. You know, this is not a long-term buy and hold in my opinion. It is pretty bearish, even though if they give good news, too many companies have failed having this chart pattern. Too many examples can be pointed out of pump up, go up, down to nothing. Countless examples. You can probably find many companies that have similar patterns like this. It is a definite do not have a long hold in this. I wouldn't even be touching this with any shorts or bulls positions myself, just because there's better companies to invest in. There's way better liquidity. And for example, Microsoft, Apple, Google, ExxonMobil, Chevron, AMD, Nvidia. The list goes on of better companies that have higher liquidity that you don't need to worry about losing 83% of your money. Because remember, any company can go to zero. If you guys like this content, throw it down in the comments section, hit the like button, subscribe. We do technical analysis and fundamental analysis on companies, especially around earnings time. And we also do a weekly update video on the market, deep dive on weekends, and periodic updates during the week. So with that, I bid you guys farewell. See you in the next one.